Hi, everyone. Thank you so much for joining us today. It's my pleasure to moderate Lessons from Industry Pioneers. Part of me feels like we should be wheeled out in wheelchairs or something because, you get kind of old in the crypto space, even though we've only been at this for 10 plus years or so. As Perry had mentioned, I'm proud to be an advisory board member of the Chamber of Digital Commerce, and I'm a partner at Outlier Ventures. I also began my journey in this space back in 2013-14 when I helped to launch and lead the venture arm of the CME Group. And it's my huge pleasure to welcome to the panel Patrick Campos, who is with Securrency, and Jason Chlipala from Stellar Development Foundation. Patrick, if you'd like to give a brief background of yourself and Securrency, and then Jason, I'll turn it over to you.
Sure. Thanks, Rumi. It's great to be here with you and with Jason. Securrency is basically a financial services infrastructure company, really focused on tying in blockchain with legacy systems and creating an infrastructure that supports all of these new technologies and all the new developments, with a particular focus on really what we call optimizing financial logistics. And that starts with really dealing with compliance issues, streamlining multi-jurisdictional compliance to really reduce costs. But there's a lot more to it. It's a very comprehensive system, and we're really pleased to work with all of the great minds in this space, including our friends over at Stellar. So hopefully that's a good segue over to you, Jason.
Thank you. Hi, everyone. I'm Jason Chlipala. I'm the Chief Operating Officer of the Stellar Development Foundation. So we are the people who created the Stellar blockchain network, which was one of the major public blockchains. And we at SDF view it as our mission to create equitable access to the global financial system. And we do that by shepherding the Stellar code base, talking to regulators and lawmakers, and also talking to private industry and helping them think through how they can build on Stellar and use it to accomplish their goals.
Thank you so much, the both of you. So as we dive in, I think for many people, when they think about Bitcoin and cryptocurrency, only know of it as something that's perhaps traded on an exchange somewhere or virtual money, but are kind of missing out on what the actual critical use cases are in our economy going forward. So I don't know, Patrick, perhaps if you'd like to start, or Jason, actually, since we did Patrick last time, let's start with Jason. What exactly is the critical role that digital assets and blockchain are going to play in the economy for decades out, right? Not how it's traded today, but how will we be using this in the years to come?
Yeah, absolutely. So, I think there are a lot of uses, but what we're really focused on, as I said, we care deeply about financial inclusion. It's actually sort of why Stellar was created in the first place. So in our view, we see digital assets as this really interesting, almost intermediary in between really heavyweight, full banking and really lightweight physical cash. Digital assets have the potential to help with the underbanked and the unbanked population because they give them the reach of a digital instrument. You can obviously, physical cash is limited by how far you can hand it to someone. Digitally, you don't have those restrictions, but it's also done in a model and in a format that is familiar to people. So we think digital assets are going to be incredibly important for helping bring more people into the financial system. And that can be through things like CBDCs, central bank digital currencies, but it's also through private stablecoins, because as other private entities issue these assets, they can then create things like wallets, which are much easier for individuals to interact with and to use. And again, they get that reach of a digital asset, but the simplicity of something that's a little more like a cash-like asset. So we view that financial inclusion piece as that's one of the ways digital assets are really going to change things going forward.
That's right. And I think it's always a very important point to stress for those who heard Congressman Emmer and Congressman Soto beforehand. And Congressman Emmer mentioned how when people think about crypto, too often it's always the negative use cases, when in reality, whether it's financial inclusion or some other areas, and Patrick, I'll toss it to you, other ways that you think digital assets will help the economy. It's a very positive innovation. Patrick, do you have other thoughts on economic implications?
Yeah, of course. I mean, first of all, just agreeing with Jason. I mean, we're talking about, and certainly this was something that was discussed by, Congressman Emmer and Congressman Soto earlier. This idea of using the technology to bring people into the market that previously were excluded, and we can talk about all the reasons why that happens, but really what we're talking about is how do you sort of not so much just lift people up, but create opportunities where people can, and again, I want to build on Congressman Emmer's point, really, exist and act in the system as individuals. So this is really, really important. We actually came at this, and we're sort of quiet, not sort of one of the front facing organizations. We're an infrastructure company. And those who are in the industry know us, and those who aren't say, well, what do these guys do? But as you can see from the name Securrency, it's an amalgamation of securities and currency, and that's really because we see value as value, and that is that you shouldn't have to treat an investment asset differently than you treat a payment, and that's sort of an anomaly, a historical anomaly, and it has to do with a lot of factors. How do you price an asset? Being one of them, but and that sort of directly leading to what value does the recipient place on the asset, and then of course whole systems, regulatory frameworks and technology frameworks are built up around these sort of distinctions. That now what blockchain does and what blockchain technology does is it allows for the automation of business logic, the automation of compliance logic, so that these distinctions no longer become so critical. And so, of course, our name really implies, you can use an investment asset as a payment and vice versa, right? So when you talk about stable coins, people talk about things like programmable money, and that has deep implications. But I'll pause there because we can go down a rabbit hole.
That's right. And actually, you were touching upon some key points that I wanted to dig in a little bit more. It's the transition from the traditional financial world to what we're seeing, and how that's going to actually occur in practice. I mentioned on my own when I was part of the CME, the first exchanges in the world, the first regulated exchanges were actually, the first one was in Japan in 1698. It was rice futures. And you would think of how people used to trade with open outcry using hand gestures for hundreds of years. And then in 20 years time, with the advent of electronic trading, that went away. But what took 20 years to displace is already being displaced, right, by digital trading. So as we go from traditional to electronic to digital, how are the financial infrastructure, how are our institutions changing? How is this being handled currently? I will talk, if it helps, Patrick, when we had the pre-call, you talked about the milk carton analogy, which I absolutely loved, if you want to share that with others.
Yeah, sure. Well, first I will say that the rice futures market. I mean, the hand gestures are a form of automation, right? So we were talking about sort of automating basic functions, even going back, right? So it's a great example of sort of how these things develop. I think what's happening here, and it's really interesting. And we look at sort of Coinbase's big day yesterday. And really the attention that's been sort of heaped on the Bitcoin and really the cryptocurrency market generally, and we view that certainly as very positive. But it's really funny, because when the institutions first look at something like this, they say, well, how can I take that really interesting development and put it into a traditional wrapper? Which, as we were talking about, is a little bit like pouring really good wine into a milk carton, right? So that's only the first step. Great, cryptocurrency is being recognized as a true investable asset. That's fantastic. We think that that's a great development, but it's really the starting point. It's what happens with the rest of the financial markets, and really that's been sort of our focus, is looking at how do we automate the rest of it, because it's not just how much can I make on my Bitcoin investment? It's more than that. It's how can I actually use it as a payment, which is what was the original thesis, right? And so we're really looking at that, and that really boils down to, number one, as I said, optimizing financial logistics. So finding out where the inefficiencies are and using technology and automation to streamline those things. Number two, it's meeting the regulators where you find them. Yes, there are things that regulators can and should change, but that change doesn't happen overnight. And if you just, find yourself at a standoff with regulators, it's very, very difficult to make progress that way. And the third thing is understanding that there are new paradigms. There are new ways of thinking about how to deal with these instruments and how to deal with the financial markets generally, things that we take for granted. The existence of centralized exchanges, for example. I'll throw a grenade into the room and say, maybe that's not long for this world. So, that's the way that I think we have to approach this.
Terrific. And Jason, you probably have some very, you're living this right now with Stella, right?
Yeah. When I think about, how it's going to change sort of the existing financial players, I think the first and possibly most important point is digital assets are not going to replace the entire financial system. Like banks aren't going to go away. I think certainly in the early days, and I think there are still some Bitcoin maximalists or others who sort of see cryptocurrency as a chance to completely do away with the existing system. I don't think that's going to be the case. What we're going to see, and what we are seeing already, is we're seeing existing financial institutions figuring out how they can use things like digital assets to supplement their existing services. So, for example, on Stellar, we have one of the oldest banks in Europe has issued a euro stablecoin, and we view that as a really important piece of our overall philosophy. We think blockchain and digital assets can supplement the financial system instead of completely replacing it. And so, like Patrick was saying, compliance is necessarily a part of that. We need to make sure that all of this is done in a compliant way, because we do have regulations for a reason. None of us want it to be easy for terrorists and other illicit actors to move money around. So you need these things, and it's really what's important is getting regulated financial institutions and also the regulators themselves to really understand how things like blockchain can actually help those, how it could actually be easier to trace the flow of funds and things like that, while still, of course, protecting the privacy of individuals. So I think we're going to see banks start to get more and more into stablecoins, digital assets, and that will both allow them to provide new services, but it can also potentially allow other actors, like, for example, a mobile wallet that wants to really serve a targeted unbanked population. They can now, using those digital assets, they can serve that population. So we're going to see this sort of grow what financial actors can do instead of replace them entirely with something different.
Right. And as it happens, though, and you touch on an important point here, I mean, this is a global technology. It's a global innovation, and you talk about bad actors, right? But you also mentioned a euro stablecoin. Mm-hmm. There are many people watching this parallel summit right now who are wondering about the United States, though, in particular. Why is it important for the United States to act decisively? What's at stake if we don't? But also for us, the three of us in the private sector, how much does one country's leadership matter here? And how should we think about the global role, or the role of countries and the leadership to make sure that this innovation is broad-based, but it also does help our own economies that we live in?
Well, I'll take a stab at that one. But first, I want to say it's really remarkable. Jason, I loved your comments there, and it's funny because I bet if our colleagues were watching, they would say, "Hey, what happened? They switched Jason and Patrick's brain there because I was talking like SDF and you were talking like Securrency." It's great. That's a good mind meld. But and I couldn't agree more. By the way, those were I think that insight is spot on. Rumi, it's a great question, and I think it's really. It's good that we're having this discussion following the panel there with Congressman Soto and Congressman Emmer, because I think they really got to the core of this, and that is that at the end of the day, to say we're technological leaders, my answer, and I'll be honest, my answer is, so what? What does that mean? What are you going to do with that, right? And the real question comes down to, is that technological advantage going to be used for good? I say this a lot. I say you can you make a hammer, you can use it to build a house, you can use it to bash someone in the head. It's not the technology, it's the policies that underlie the technology. It's the things that you as a society choose to do with the technology. And blockchain in particular, for those who really understand how it works, on the one hand, if you don't attach identity, and here we're talking about all the FATF stuff, if you don't attach identity to it, it's a money launderer's dream. You can send value anywhere you want. Nobody knows where it went, why it got there, or what anyone is going to do with it. On the other hand, if you attach identity to every transaction, then you have the greatest big brother surveillance tool ever invented. And, so in this conversation earlier, and really the backdrop of this entire discussion, which is, one, is blockchain critical American infrastructure? I think easy answer, yes, of course. But two, how do we maintain a technological edge over China? And I think that first and foremost, we need to maintain a philosophical edge. What are we going to do with it? If you are going to deploy blockchain technology universally to surveil your entire population, and in China, no one has an expectation of privacy, and that's not a knock on the entire nation of China. It is a fact, and I don't know. Sure, that's a powerful deployment of technology, but is it a good deployment of technology? I think if we start there and look at what we want to do with the technology to maintain the values and the principles, which include things like financial inclusion, as Jason was talking about, then we're going to get to a better place. And certainly those of us who are in the industry, I can tell you right now, what we do in the United States of America, the brilliance of the technologists here is unsurpassed. So I'm not worried about that part of it. I'm more worried about what we do next.
Yeah, and building on that, I think we're also at a point where the technology decisions are important. I think focusing on sort of the CBDC conversation, I think a lot of people, and rightly so, wanted to start with the policy implications. Let's set the tech aside. Let's not talk about this network or that network or proof of work, proof of stake. Let's really think about the policy implications. And I think that was right. That's the right way to start. But you do reach a point where the technology will intimately interact with the policy and the outcomes you're going to get. Patrick just outlined some examples of that around identity and the difference between the big brother state and others. And so I do think we're at this point now where everyone needs to be thinking about the actual technology to implement this on. For example, one important variable that's of course close to my heart and SDF's is the question of an open network, an open permissionless network versus a permissioned network. Quite frankly, there are use cases for each, and each one has pros and cons. But we need to think deeply about which one makes sense for things like digital assets. Our view is open permissionless networks should and will play an important role in all of this, because we've seen with the internet, for example, the power of an open network. The whole point of it is you don't know what someone else will be able to do. If it's open, you open yourself to that potential innovation. I think also certainly in some of the in some more developing economies, and for example, we're seeing this in a lot of the island nations, they are very interested in CBDCs because of the financial inclusion potential there. And our view is if you want an instrument that acts cash-like, it's of course not the same as cash, but cash-like, an open permissionless network is the best technology for that, and quite frankly might be the only technology for that. So that's an example of where the technology choice really is important for the policy outcome you're trying to have. So we think it's important that as the Fed and other central banks are thinking through this, they start to consider the technology more closely, and we think we need this sort of public-private collaboration so that on the private side, we can be understanding what are the things that central banks need, because we don't, nobody thinks that all the blockchains out there, they have the exact feature set that is needed, that they just happen to get it 100% right. it's gonna be this back and forth. It's about iteration. It's about that sort of Silicon Valley software ethos of how you create technology that's really, really useful.
Right. Well, then what do you think there is at stake if the US government and its leaders do not move fast enough? You know, Jason, you mentioned we're kind of at a point now where we can focus on technology, but there's so many who still say this is still so nascent, right? There's time yet. We still need to learn about this. How much more learning do we need to do, or do government leaders need to do, versus now acting and participating in public-private partnerships and other ways of progressing here?
Well, one thing I would say, I'm going to kind of skirt around the question. I'm not going to give an answer of like how quickly do we have to act, but I will say I think one thing that countries can do is they can move forward with more projects involving private stablecoins. You know, you don't have to, a central bank doesn't have to jump straight to, here's a retail CBDC, everyone now has an account with the central bank. You don't have to jump all the way to that right away. There's a broad space of potential things to do, and quite frankly, we at SDF are seeing more and more interest from central banks actually to sort of start with pilot projects, or they want to see the experience of commercial banks within their country issuing stablecoins. So I do think that's a very useful way to start. And of course, you know, increased regulatory clarity would help with all of that. But I think that's a good way to start. And again, we can kind of start iterating, figuring out what works, what doesn't, and make progress that way.
Right. Patrick, do you have other thoughts on ways that governments can become more engaged?
Well, I think governments are becoming engaged, but you know, government engagement is not always a good thing. You know, I think that there's there's a lot of you know, sometimes when you don't really understand something and you start tinkering around with it, and I think it's not really that, because I'm not really trying to say that, you know, every lawmaker is complete or policymaker is completely bamboozled by, you know, blockchain technology. It's not really that. It's really that what we're saying is that most of the time, if you talk to regulators, if you talk to policymakers, the very first thing they're trying to do is figure out, into what bin does this thing fit? I need to classify this thing, right, as a, animal, vegetable, mineral. What is it, right? And when it's new, it really typically doesn't fit into any one of those categories. And it's that you know, kind of tension between trying to categorize it so that you can regulate it, and trying to capture the, you know, the new potential of it, is where we run into some problems. So I think, you know, and I'm not saying that it should be a one-way dialogue, because I think that's a problem that our industry has, is that we often think, well, if you guys would just shut up and listen to us, then you'll understand all the magical things we're telling you. And I think that doesn't get anywhere either. So I think that what really needs to happen is, I think, first of all, you know, we need to really look at what we want to achieve with particular technologies in terms of philosophical and policy outcomes, just as Jason said. Like, first talk about that, and then you can figure out where it fits. I do want to make one note, because, you know, as we came into this part of the discussion and leading in from the last panel, you know, there's this issue of China, and I think that you have two camps. You have one camp that says, look, this is a grave threat to the U.S. dollar and to U.S., you know, even national security. And then you have another camp that says, no, it's a U.S. dollar is an impregnable fortress. If I had to put myself in one camp, I'd be in the former camp more than the latter camp. It's more nuanced than that, but I would say anyone who doesn't think that this is, you know, real, and that the use of the technology by sovereign actors to influence global affairs is real, I think that they are really just whistling past the graveyard. It's real. And so it's incumbent upon us to recognize that and to act upon it. I'm really grateful for the work that the Chamber is doing, and the blockchain caucus in this regard. So I'll end on that note.
And I would just add to that. I mean, I think in this age of Facebook, we've all become very used to talking about network effects and how powerful they are. You know, we shouldn't be confused. Money is a network effect, and you know, money that can go more viral is more powerful. So I agree with what Patrick just said about the importance of countries like the U.S. and others sort of being part of this progression.
Right. And I also underscore that the United States is made of 50 states, and we're certainly seeing a lot of leadership from Wyoming. There's a bill in Illinois right now. Kentucky had a crypto mining incentive bill. Perry-Ann previously was talking about Miami as a city. So leadership is not just at the federal level, and it's great to see a number of US states and municipalities stepping up in this area as well. So with that, I'm going to thank you both, Patrick, Jason, Securrency, and Stellar Development Foundation for joining me today in this discussion. And for those watching, please enjoy the conference as it continues. Thank you so much.
Thanks, Rumi. Thanks, Jason.
Thanks.